very good morning, afternoon, and good evening. I am Dr. Ravi Kant from Microsafe Consulting, and I thank everyone for joining this webinar on digital transformation. Is there a readiness in the banking and microfinance industry? On behalf of Microsafe Consulting, I welcome all our panelists and participants who have joined us today from various geographies. Over the years, Microsafe Consulting has jointly worked with many financial institutions to help them transform digitally. With digital transformation as the core, we support our partners to make financial services accessible and affordable for the end customers. In this webinar, we will get an opportunity to hear from our panelists who have led digital transformation in the respective organizations. Before we start, I will give a very quick round of introduction for our panelists. Mr. Imran Ahmed is the Deputy Executive Director of Shakti Foundation for Disadvantaged Women, an MFI based in Bangladesh. He manages microfinance and SME programs and leads its strategic initiatives units of Shakti Foundation. George Chuguna, our next panelist, is the Director of Information Technology of Safaricom, which is the Kenya's largest mobile network operator. He spearheads Safaricom's M-Pesa, the largest digital financial service provider in Kenya, among other digital channels. He has also served as Chief Operating and Information Officer of HF Group. Our next panelist is Mr. Akhilesh Singh, who is the Chief Financial Officer of Sonata Finance, where he is responsible for overall finance, tax accounting, compliance, risk management, and internal control. And he has more than 2 decades of experience in India's microfinance industry. Our next panelist is Mr. Salim Arif Hussain, who is the Managing Director and CEO of BRAC Bank Limited, one of the largest banks of Bangladesh. He has been a career banker and he has spent 24 years between ANZ, Greenlay Bank, and Standard Chartered Bank. He is also the former CEO and Managing Director of IDLC Finance Limited, where he was credited for its meteoric rise. Our next panelist is Tatiana Bed, who is the Head of Business Support Unit of MicroInvest, a microcredit facility in Moldova that offers consumer and MSME loans for agriculture, card payments, and mortgages. She is also the former bank cards operations specialist for Fincom Bank. With this, let me brief you also on the schedule of today's 1-hour webinar. After my welcome address, we will start with a small presentation on digital transformation by Mr. Anup, who is the Regional Head for Africa for Microsafe Consulting. Following the presentation, our moderator Juliet will moderate the discussion with our panelists. Post this, we will have a small Q&A session where the participants can share their questions in the chat box, and our panelists will try to address them. Lastly, we will have closing remarks from our director. With this, I would like to hand over the stage to Anup for the presentation. Thank you.
Thank you so much, Ravi. Welcome everyone, welcome panelists for this interesting discussion on digital transformation. My name is Anup Singh. I lead the Microsafe Consulting business in Africa. I'd like to talk about the what and why for some of the participants who are joining, who are looking at the digital transformation as an issue for the first time. So if we start talking about digital transformation, it is essentially offering the right combination of digital solutions and tools delivered digitally, riding on digital technology, and providing seamless user experience. There are about 4 aspects of digital transformation that we have to start thinking about. The first one is business model and products. So financial institutions can look at digitalization to foster innovation across products and business model. Any product innovation involves utilizing technology and partnerships to introduce specialized products and services. The digitization of products requires developing solutions that resonate with customers through addressing the pain points rather than just trying to digitize the use cases that are there. Financial institutions can also benefit from utilizing the existing digital data trails and ecosystem players to deliver new products and services to clients. This brings in opportunities to enhance the capabilities of the client as a way of innovative service bundled with the products that are offered. The second aspect is channels and technology. Apologies. On the channels and technology, leveraging technology to digitize the traditional channels is key in accelerating digital transformation. The digitization of channel involve using technology platforms to improve customer acquisition and user experience while transacting. The emergence of digital platforms and alternative channels has profoundly changed the way customers do their banking. Nowadays, what we see is with the emergence of youth, only a few customers are willing to step into a bank branch. The more access points they have, the better the user experience that is there. The next aspect is on the processes. So automating and digitizing several repetitive, low value and low risk processes through process apps brings efficiency. Digital processes are quicker, more efficient and cheaper than the manual processes. The digital transformation of processes reduces the cost and friction points of delivering the services. It provides the data that is needed to supply a better service offering to end users and increasingly to businesses as well. And improvements in efficiency now has made possible to reduce the cost of sale for the most products. So thus the institutions can become more competitive in terms of pricing, and they could also focus on reducing the cost for the reducing price of the product for the users. Last aspect is the user engagement and experience. A great user experience involves solutions and the manner of the delivery of these solutions that mimic the behaviors and attitudes of the users. The provision of services should be clear, obvious, and intuitive to the end user. And to be able to build such kind of a customer-centric solution, there is a need to focus on user experience, to assess what bottlenecks they're facing, to incorporate their customer journey approach in the delivery of the products and services, and embed the progressive learning curve of the users. Overall, what we have found working with different institutions is that digital transformation not only impacts the institution, but also is a great tool for deepening access to financial services for the low and moderate income populations that are underserved. And for those who are from the remote and rural areas, digital transformation could help to bridge the digital divide as well. There are 6 aspects of digital transformation that we need to focus on. The first aspect is on customer centricity, which talks about products and services that are delivered digitally, system-based parameters and behavioral assessment as part of it, and focused on robust data analytics. This is then followed by omni-channel presence, which focuses on optimizing all distribution and delivery channels. The third focus area is on optimized and re-engineered process. So we enhance the efficiency of the processes through end-to-end digitization of process, which enhances the productivity and staff leverage. Then we focus on customer engagement, the enhanced customer engagement and retention by creating a digital brand and reaching out to customers using multiple channels, creating robust IT infrastructure as part of organizational alignment, and aligned and strategic partnership to deliver on the promises of digital transformation. And lastly, the focus area is on improved and proactive risk management using shared risk platform with a focus on strong risk monitoring and reporting culture. So if we look at why should financial institutions transform, if we start talking about what are the potential threats in case the institution decide not to transform, if we look at percentage changes in expenses year on year, the innovative new offers by competitors impact the expenses by about 13%. Margin compression impacts it by about 16%. And then overall increased operational risk impacts the potential threat in terms of changes in expenses by 6%. So potential threat of not digitizing or not transforming digitally is about 35% in terms of expenses. In terms of opportunities, the increased revenue from innovative new offers and business model gives a financial institution a chance of increasing revenue by 5%. Increased revenue from new products, distinctive digital sales, and data to cross-sell gives chance of 10% increment in revenues. And overall, lowering the operational cost from automation and digitization and transaction migration is about 30% plus. So overall, we see that the size of opportunity is about 45% in terms of the revenues year on year. Thank you so much. I hope this was helpful to lay the landscape of digital transformation and the frame within which we'll have our conversation today. Back to you, Ravi.
So over to you, Juliet, for the moderation.
Thank you very much, Anup and Ravi. Anup, I think you've set the stage very well. We have a very diverse panel that will be able now to unpack some of these issues that you've mentioned. You know, what are some of these pain points? What are we doing in terms of enhancing this customer experience? What are we doing in terms of new business models and new types of competitors coming into the market? So I will welcome the panel again. My name is Juliet Ongwai, also part of the MSC team, a senior consultant with MSC, and I'm based out of Nairobi. So I will just start us off. We can start with George. Thank you very much, George. I know you wear several hats, and you've been a banker before. Right now you're with Safaricom. So I just wanted you to wear both hats, and if we could look at the different business models that we are seeing right now. So Safaricom has really led the scene in terms of being a huge enabler for fintech explosion, especially in Kenya, and also setting the standards in the world. And this has really transformed our financial services landscape. So what are your thoughts in terms of how digital infrastructure and business models of the future will look like? Where are we headed?
Yeah, thank you, Dr. Juliet. I think, as I said, I'm out of town, so I may not have my video on. I trust you can hear me well?
Yes, thank you.
Yeah, so first let me thank Anup. It's good to see my old friend who taught me a lot of what I do, more collaboratively, Edward and the team. So a lot of credit to what you've done, not just within Kenya and financial services, but even on the continent to deepen financial and literacy on digital financial services. So I think we're at a very interesting place. We're at a place where someone's a bit loud. Okay, we're at a place where the business models of the past are being disrupted. We're seeing a lot more collaboration, not just between internal institutions, but even across industries. If we look at one of the products that we have on digital lending, we have Fuliza, Mshwari, and KCB. They are all in collaboration with financial institutions. But the core thing is how quickly can people access credit? How can they access it in the most ethical manner? How can there be less friction in terms of access to these products? I think about it, I always give the story of Fuliza. For those of you who are not Kenyans, Fuliza is a Swahili word that means continuous flow. Safaricom, we found out that 56% of the transactions that fail on M-Pesa, right now we do about 60 million transactions on M-Pesa a day. So 56% of the transactions that fail would be completed the next day, which meant that it's not that the people didn't have the money, they just didn't have it in their mobile wallet at that time. And it's quite embarrassing. You're at a hospital. It's just that you haven't loaded your wallet. You do have the money, and you end up being denied a critical service. Sometimes it's a life or death matter. So we used big data and analytics to be able to identify that trend, but also to come up with a solution where right there and then you're able to have an instant overdraft offered to you, which you accept in the middle of the transaction, and we call it contextual lending. So that was totally different. Sometimes you have to work with regulators, policy. It created a whole lot of other functions. Because of entering this, in my tech team, I have a lending team, a big data team that work on that. So I think those are some of the disruptions to the models, but also unlike banks or many of the institutions that have people walking around, direct sales agents, trying to sell loans, they're filling physical forms. We are doing the most loans in the country combined, even if you combine everybody else. And there's not a single human intervention. It's totally running on technology and also maintaining and a non-performing loan rate of less than 1%, which is phenomenal, sometimes as low as 0.3%. So I think that means totally new functions, a totally different way of doing credit, a different way of doing scoring. Collections are also fully digital, but also working on key collaborations that help us achieve this, but always connecting it to our purpose, which is transforming lives. Thank you, Julia.
Thank you, George. You've mentioned something very interesting around no human intervention. So I'll just put a pin on that and I'll come back to you on the same. I'll move over to Imran. So when we look at Shakti Foundation and its digital transformation journey, I know we've worked with you on a number of programs with the microfinance and SME programs. So how have you leveraged on digital initiatives to help become more customer centric, especially when you're looking at the type of customers that you engage?
Yes, thank you, Juliet. For the group, just a brief explanation of what Shakti Foundation is. It's one of the larger microfinance institutions in Bangladesh. We serve about 500,000 female clients all over Bangladesh, out of about 500 offices and 4,800 staff. We focus on 4 pillars, right? Microfinance, climate change, health, and women empowerment. And microfinance obviously is our flagship program that we have been doing for the last 30 years in Bangladesh. Again, very much focused on women, mainly urban and suburban women. So when I joined Shakti about 5 years ago, one of the things that I realized that microfinance industry, right, which in Bangladesh, it has evolved quite substantially, at least in the last couple of decades, right? But patterns and clusters started to emerge over here. Mentality of our clients have become more service oriented. They have become much more financially aware, and competition has increased, right? From banks, from MFIs, they have choices and options, right? So it quickly became clear to me that holding on to traditional mindset would not take us far. And we are a 30-year-old organization, right, already. So we just needed to innovate, and that's how we needed to focus on growing. Not only that, as you mentioned, to serve our clients better. It was just need of the hour. And really the best way to do this was to basically to accept digital transformation for multiple reasons. One of the things is that unlike other institutions, microfinance is very human resource heavy, right? For every 200 clients, we have someone, right, addressing their needs. As you know, we are all nonprofits over here who are MFIs. So the level of pressure and load in the field staff is quite remarkable, right? So we saw an opportunity using technology to relieve a lot of their pressure, because a lot of the work would be manual. And if we saw that if we converted it to technology, that would free up a lot of their time to actually focus on clients, right? Which we really wanted. So what we started off with, which was a low-hanging fruit for us, is to focus on processes, right? And convert a lot of the traditional business models, as Anup mentioned earlier, with the help of Microsoft Consulting and MetLife Foundation. And we did a lot of digital transformation of that as well, which gave us immediate results. Just to give you an example, as of 2 months ago, we became completely paperless, right? All my 4,800 staff all over Bangladesh, for a country like Bangladesh, we only use paper to meet official regulations. Other than that, we have completely become paperless. Every single staff of ours uses smartphones to do collections, disbursements. We have completely transformed that side of things. What it allowed us also to do is, it allowed us to bring a lot more flexibility. So when we are targeting different clusters, different categories, because we are realizing that treating all of the people as one is really not the way to go or move forward. Seasonality has become a factor. Payment terms have become a factor. Loan processing has become a factor. So digital transformation, this foundation has really given us a lot of flexibility and power to target specific segments, right? From assessment to delivery, it really allows us to respond much faster than anyone else in the marketplace. What it also allows us to do is it helps us monitor and supervise a lot faster. Because we have completely moved into apps, we have much more transparency and accountability of our staff as well. What we do is we make sure that our staff are touching the clients they're supposed to. They're spending time with the clients that they're supposed to. So we are actually being able to allow our staff to spend a lot more time with their clients, to address their needs that they're supposed to. And the part that we are working on now, Juliet, which is the next phase where we are strongly working on, is the client side of things, right? To hear a bit more from them, what their feedback is, what they want to see in the marketplace as products and services, so we can start designing according to their needs. Thank you.
Thank you, Imran. So what I'm hearing is you started with processes and now are now looking into clients and possibly looking into the data you have on them, and that will shape your next steps. So I'll move over to Akhilesh, just on that same trend. Imran has mentioned one of the challenges, which was around MFIs being very human resource heavy. So as microfinance institutions are moving along this digital journey, what are some of the other big roadblocks that they are facing as they do so?
Thank you, Juliet, for this opportunity. And the roadblock that I see that the most of the FIs are having the data digitization. So they have data digitization in place, but now the time is to move beyond that. So which is the process automation and improving the customer experiences. So even the pandemic has pushed us a lot to think through on the digitization, and we have done a lot of work during that pandemic. So few of the examples that so when we see the digitization, we see it from three the angles. One is understanding and smoothening the customer experience towards the the company service and products. And the second is the smoothening the staff experience in delivering the product. And third is the improving the management experience in terms of using data and taking quick decisions. So these are the three things which we have moved from the data digitization to the process digitization. So let me come to the improving customer experience. So what we have been doing before the pandemic. So the customer used to have this manual the collection sheet and the loan cards or loan passbook. So sometimes the microfinance staffs are not very good in keeping the bookkeeping very neat and clean. So there are a lot of the cutting and overwriting. Sometimes this lead to the miscommunication, misunderstanding at the client level. So we have devised an application, the customer facing application, first time I would say in Indian microfinance sector, where customer can see all their the financial relationship with Sonata Finance on their application. So let's say if they have taken loans, so they can access their the loan records as and when they are needed, and it is real time update on their the data, and they can know means how much they have paid and when they have paid and what is the loan outstanding. This is the steps towards giving the transparency to the customer. So this is one critical the step that we have taken towards digitization. And this application is not limited to this. They can do everything that is required to have the financial relationship with Sonata. So they can make a payment, they can recommend someone in their community to come and access the financial product from Sonata Financial Services. So this is one thing we have done on customer front. Coming to staff front, we realized that the microfinance staff are busy day to day, just disbursing loan and collecting loan. So sometimes they are very limited to they have very limited the guidance from their supervisors. So we thought, let us use the technology to guide them based on what they are doing on day-to-day basis. So recently we have developed an application for staff, which we call Sarthi. Sarthi is Hindi terms, it means, the guide. So where we have used a lot of, the data analytics and AI. So what one, the field staff are supposed to do. So they are supposed to service their customer. They are supposed to source new client, and they are supposed to increase business for the company. So this, the Sarthi, based on means what the data they are dealing with, means what the customer they are dealing with, all the data are there. So let's say, for example, let's say if they have to increase their, the loan customer. So what they should do. So whether they should focus on, giving repeat loan to the existing customer or sourcing new customer. So this, the application will push them that, see, your loans are going to be closed in next few weeks. So focus on this customer. So that this will increase, the customer retention, and this will help, the field staff to retain the customer and, serve them better. Similarly means, so this is on business development, and on the the maintaining the quality of portfolio. So let's say some customer has slipped from the regular payment to the area towards area the payment. So this application will show them on real time that, see, your customer, this many customer has moved from regular to non-regular payment, the cycle. So similarly, lot of, the analytics and, the intelligence that automatically being pushed to the customer, to the field staff. So this is one part of it. There are many features in that, the applications. Coming to, so one is guiding staff, and the second is, the monitoring and, monitoring the staff performance. So how they are monitored, this is very, the difficult task in microfinance institution. So many of institutions are doing 360, direct feedback from their supervisors, and there are a lot of, the human biases that comes in. So what we have done through this digitization is, so we assign, so each field staffs are assigned tasks on daily basis. So let's say they have to conduct 5 centers meeting. They have to meet, let's say, the 45 clients in a day. So they are assigned tasks on daily basis. And once they finish the task, so there are performance indicator, and they are rated on each indicator on daily basis. So that becomes their, the performance monitoring on everyday basis, which is recorded in the system, and basis which we come to, the annual performance, which is completely automated, away from the human biases, and particularly, the based on data and facts. So nobody can complain that means there are injustice or unfair with me. So this is one, the good, the achievement we have done after pandemic.
Okay.
So yeah, so this is, the staff coming to, the management. So you will see means you might have seen while, the visiting various microfinance institutions. So reporting that comes to the management, say for example, audit reporting. So
Yes.
there are very, the consolidated remarks that comes to the management. So let's say, for example, means center meeting is not done in the way it should be done. So what does it mean? There are, the many factors of having good center meeting. So one is client attendance, and the second is, the on-time repayment, on-time attendance. So these are the factors. So once means you are getting, the very generic reporting, and if you are getting very specific reporting. So once you are getting a specific reporting, you can act upon, and you can pinpointly say that this need to be fixed. So these are, the larger things that we have done, and probably means we need to move from, the data digitization to process digitization to optimize the performance.
Okay.
Yeah, that is.
Thank you very much. I'll move over to Selim. So it's very obvious that BRAC Bank puts a lot of priority in terms of digital transformation, and the numbers are showing a tremendous success in terms of this digital journey. So could you just speak on how you've been able to manage and execute a culture shift for digital transformation at such a large scale?
Thank you, Juliet. Interesting question. The fact that you're focusing on culture more than anything else. Obviously, it's very important because if one is not able to get the entire team on board with this transformation, then it will not succeed. And we have a relatively large team, close to 10,000 odd employees spread out across the country. We're talking about what? 200 fully licensed branches, 360 sub-branches, thousands of what we call agent banking licenses, etc., etc. So we had, when we started off back in 2018 and began the actual planning, it was not so much this large group of people or colleagues that we had to convince first. Our first and most difficult task was convincing the board, getting the board to understand what digital transformation was all about, why the bank needed to spend so much money. And on average, since then, we've been spending between $30 to $40 million annually since 2018 on the overall digital journey itself. So we needed to get them on board. And we did that aside from spending many hours with them and consultants, but we finally took them to a number of countries to see what digital transformation, how digital transformation had succeeded in what I may call cutting edge institutions. For example, we took 7 of our board directors to DBS Singapore, and very kindly that bank gave us a whole day telling us how they had transformed themselves and the benefits they got. And of course, once the board was cleared, we had to put together strategies for communicating our plans to the whole bank, so that everybody came on board and took ownership, and there were no issues as such. Let me start off by saying that for us in BRAC Bank, digital transformation or digitization or whatever you want to call it is really an enabler and no more. And therefore, very early on, we started off by articulating 4 important objectives that every dollar we spent was aimed at achieving. The first was significantly enhancing customer experience. The second was growing revenues. The third was reducing costs. And the fourth was improving controls. Ideally, whatever we did would impact all 4 of these what shall I call sectors or areas positively, but whatever it meant is that whatever dollars we have spent have gone into different projects, initiatives, and all of those are aimed at achieving one, if not all 4 of the sectors that I spoke about: customer experience, revenue, cost, and controls. So we also recognized early on that in a developing country like Bangladesh, becoming a digital bank or a neobank does not make sense. We are mindful of our economic and social realities on the ground, particularly for BRAC Bank, where close to 50%, slightly over 50% of all our client assets, and the bank has what, about $6 billion of assets. 50% of that is spread out across the small business segment, and that is a customer segment which is relatively lower income and lower education based as well. So it would not make sense for us to try to offer completely digital solutions to all those clients. And as a result, when we take into account all our infrastructure, our social norms, all this, and also our demographic profile. We decided that we'd have a combination. In other words, we call our solution, particularly the distribution solution network, as phygital. So it's a combination of physical and digital. It's a hybrid solution. So you have physical branches and agent banking outlets and sub-branch outlets, and these are complemented by a series of digital solutions, a banking app, a corporate banking app, a retail banking app, ATMs and CDMs and a robust call center, etc., etc. So it's a combination of all this targeted at all three client segments: SME, retail, and corporate commercial as well. So we started off, when you talk about mindset, again, coming back to that point, we spent a lot of time explaining to our team members what we were doing, what the benefits were going to be, and how this would help each individual actually develop in their own professional careers. Obviously, when we talk about digitalization, one of the apprehensions that crop up is staff redundancy. Because we are a growing bank, we also allied this digital transformation to our business strategy, and that has a strong growth strategy. We were able to show our team members that the bank is not expecting to make people redundant, but what perhaps in many areas, there will be a reskilling or an upskilling into different roles. So, for example, if you think of our branches, Juliet, in the past, they were sales and service outlets, and now the service is gradually being replaced, and they are now sales and advisory outlets. So branch staff are required to do something different from what they used to do earlier. The footfall in branches is falling. We have less customers moving in. Therefore, branch personnel are able to do something else: sell, provide advice, call on customers, market, etc., etc., etc. So that has worked out very, very well. And if you look at the actual numbers, let me share with you some key messages. Back in January 2020, just before the pandemic, roughly 16–17% of BRAC Bank's transaction volumes were what we call digital or alternative in nature. Everything was manual, paper-based, branches, bricks and mortar, etc., etc. Look at it 2.5 years almost later. Today, that 17% has jumped to close to 60%. 60% of our transaction volumes are now either digital or alternate in nature. For example, done through the call center or an ATM or a CDM or whatever. Very importantly, 80% plus of our transaction numbers today are already digital. Only 20% are manual. So that gives you a sense of how that digital transformation is moving, and how the dial is moving from left or manual to the right side with digital. So yes, a lot of investment in terms of mindset. May I also add to that some of the ways that we've done it? We've invested heavily in customer centricity as well. And I saw that highlighted in the presentation that, was it Ravi or was it somebody that had made, sorry.
Yeah.
We've invested heavily in human-centric design training or HCD training for our team members as well. The latest batch of about 250 people over the next 6 months has actually started today. And HCD training is aimed at getting banking personnel to change their mindset, to focus on what customer needs are, to find solutions for them, and also in almost every case to become more tech savvy, digital savvy, and use digital tools to solve the customer's needs and problems.
Okay.
I'll stop there, Juliet. If
Thank
there's
you.
anything else you'd like me to touch upon, please do let me know.
Thank you, Selim. So what I'm hearing is a lot of investment in terms of getting buy-in and a lot of training, human-centered design training. Thank you. Over to you, Tatiana. So you are a different type of financial institution and you're focused on lending. So I want to narrow the focus to credit risk management. If you could just talk about how you've leveraged technology and specifically on credit scoring.
Thank you, Julia. So at the beginning, some information about microinvest. We are market leader with a share of more than 30% of the entire market. And we offer full range of products from retail products to business entrepreneurs, which are the core of our activity and are more than 70% of our portfolio. About your questions, so we start our job 7 years ago, and now we are halfway there. We have the in-house credit scoring that has a consultative role, and our main decisions are taken on the algorithm base. And our speed of approval comes from automatization of processes. We are connected to free credit bureaus. We use them to collect customer data that we use after for decision taken. About lesson that we learned in this process. The most important is that the process implementation cycle must be shorter, and to ensure that the project description can cover just the points that you have to develop in the near future. So you have to create projects and technical descriptions comparable with your development capacity. Otherwise, you risk that you have permanent pending projects with fully described technical tasks that will get older and previous efforts will be lost. So we can say that the problem, the most companies that start to invest in digitalization is that they have a capacity of writing of technical description, but they don't have a capacity to develop it. Thank you.
Thank you, Tatiana. So what I'm hearing is around the process implementation cycle needs to be shorter.
Yes.
And just challenges around capacity to develop.
Yes, this
so
is important.
Thank you. Very interesting, and we are running out of time. And I know I can see activity in the chats in terms of questions coming from participants. Doreen, do you have any questions, or I could do at least another quick round?
Yes, there are a few questions. Would you like to take them in the Q&A, or?
Okay.
Yeah,
Thanks.
maybe one or two. I think we can push them to the Q&A.
Okay.
All right.
That's fine. So I'll just do a quick round and give the panelists probably a minute just to talk about what is the biggest myth about digital transformation and how can we debunk this myth. So when you hear people talking about digital transformation, what is this they're talking about that's really not true, and how do we let them know what the truth is? I'll start with you, George.
Hey, Juliet, that's an interesting one.
Yeah.
I think there's sometimes a perspective that digital transformation is not disruptive. I think especially in unless you're in a startup, digital transformation can be very disruptive, and the culture side of it is as important as anything you'll do on the process and tech, so the people and culture. And I think many organizations never complete any transformation journey, because sometimes even the people who start the transformation get hounded out by the incumbents. And so I think people need to count their costs before doing it, because majority of these strategies are all the same, to be honest. As you correctly said, I worked, I think, in 4 banks, locally and internationally. The strategies largely are the same. The objectives largely are the same, but the execution is where it falls apart. And majority of the time is, I think people want to have their cake and eat it, but you will be disrupted. Something will be affected. Sometimes even your traditional revenue may have to go down. Maybe you might even need to invest in two product sets, and one ends up cannibalizing the other. So disruption could come from either side. So that would be my contribution. Very good.
Thank you. Thank you. Imran?
Yeah, I think so. So at least for MFIs, I would say that I don't think, not everyone, I don't think digital transformation is for everyone. As Selim Bhai say, I think a lot of lining up is needed, right? Board level lineup, senior leadership level lineup, even junior staff level buy-in. It's extremely important people understand the vision of what you're trying to do. And in many cases, some organizations might not be ready, and that's okay. I mean, again, like, right, regardless of how much digitization we do, Shakti will always, what I say, is gonna remain as a high-touch, high-tech model. I mean, we will never be able to replace high-touch, and we don't want to, right? So again, like, one should assess, like, it's very important that if you want to do digital transformation, you should be fully bought in. Otherwise, it's expensive. It's very draining. As George said, it's very disruptive. So one has to have very clear understanding of what one wants to do, and then a full buy-in to make it happen, right? So that's point number one. The other thing is, even this, when someone starts this digital transformation journey, it's very naive to think that we have figured out everything, right? Because it's each institution is so different. And that's one of the challenges, right? That one needs to be quite nimble in decision making, because you start something and then you quickly realize, wait, there might be other ways of doing it, and it's very important again to adapt and figure things out. But again, in general, I strongly believe digital transformation doesn't have to be for everyone. And again, digital transformation doesn't have to be everything, right? As Anup has mentioned, there are some key buckets. So one can focus on different pieces that's more relevant and start somewhere rather than just completely transforming it, right? So that would be my 2 cents on this.
Thank you. Akhilesh, 1 minute.
So for me, the biggest myth is transforming digital is expensive. So as Imran Bhai said, means I'm contradicting that, but I'll take his other points. So see, means once people think about digitization, they are thinking about complete digitization. There are different chunks. So let's say, means particularly MFI, they can start, many of the MFIs are on, they have done data digitization, but they can move on process digitization. And then means the many people are fascinated with, the AI, the fancy terms that is coined in the market. So, AI, the statistical based model, so all these things. So many works, many doesn't work. So first you have to choose, like, process digitization is very important for MFIs. So, and it is not very expensive. So there are a lot of techie around you who can help you at very low cost and help you to plug in, the different applications which can help you smoothen the digitization process. That is from my side.
Thank you. And very interesting insights. Selim, I'll give you a minute.
Selim bhai, you are on mute.
You're on mute, Selim.
My apologies. Sorry, as I said earlier, Juliet, we've spent a lot of time in planning, organizing what we want to do over a 6-year period initially. And that is needed because of the large amounts of money involved and the big changes. So in our case, it is very objective driven. What we want to achieve in terms of customer numbers, in terms of improvements to our customer experience, in terms of reach, in terms of product, in terms of revenue, in terms of reduction of costs, etc., etc. So we've invested an enormous amount of time in project management for each of the initiatives. Quite a lot of money actually in that area alone, just to ensure that everything is tied to strategy, and that strategy determines what digital transformation, business strategy determines and drives our digital transformation, and it's not the other way around. So it's not technology doing all this. What do we need from a business perspective? And then how do we get our technology to support and build those capabilities? So that I think is very, very important, not letting a digital transformation in any institution be run by techies, if I may use that word. It has to be business driven, business owned. And in our bank, everything is. So in terms of benefits, I see a quick, let me try to answer a question on how has BRAC Bank benefited from digitalization. Again, the numbers are monitored very, very carefully, even at an enterprise level, in terms of our cost income ratio, in terms of our revenues. Very simplistically, everything that we're doing incrementally in terms of project costs has to fit in and generate the same kind of return on asset, return on equity, cost income ratios, etc., that we have planned for. So nothing is wasted as such, or nothing is done simply because it would be good to have. The other point I need to emphasize is that in our kind of countries, digital transformation has to be, as Imran said, it has to be a combination of high tech and high touch, because so many customer segments may not be perfectly tuned or suited to being completely digitalized. So, for example, 10% of BRAC Bank's customer deposits come from senior citizens who are 60 plus. And in general, I would not like to make a broad brush stereotype type statement, but in general, we find in our culture that people who are 60 plus find it a little more difficult to get used to digital solutions. So we have to cater to them. High touch is still very, very important for countries like us, and particularly, may I add, in terms of client acquisition and in terms of loan acquisition. There, I think high touch is very, very important, particularly for slightly larger loans. I mean, if you're talking of smaller nano lending kind of loans, that can be digitally acquired, onboarded as well. But if it becomes slightly larger, a car or a house or whatever, then you need high touch as well.
Okay, thank you. Yet again, a different perspective. So last one, over to you, Tatiana. Just one minute and then we can close.
Yes, I agree with Salim. So
okay.
It can be fully digitalized. The customer appetite for digital interaction depends on the product. So from our experience, some customers are less willing to make transactions via digital channels when it comes from complex products like mortgage or investments, especially business clients. So we have to pay equal attention to the human side as well as important as the digital side. And thank you. That's all.
Okay, thank you. Thank you very much to our panelists. I think we've gotten great insights and some of the things that have picked up is definitely disruption is coming. We've talked about being able to be nimble and agile, and also not necessarily start from tech. It's an enabler, not the end and be all. So start with your business strategy. We also got insights around it might not necessarily be for everyone, possibly look into the different buckets as you start your digital transformation journey, and start slowly, think of your costs, your budget as you digitize. So thank you very, very much. Unfortunately, we had only the hour. There's definitely loads of questions that we were ready to send your way. So we definitely are hoping that we will have a similar panel in soon. So I'll hand over to Anup to close the session. Anup, over to you.
Thank you so much. I think it was a fascinating conversation between our panelists. What I would like to talk about is take some of the pointers that they mentioned and just talk about it in a little bit more detail, so that would be the takeaway that our participants take with them as we close this. What we heard was that the change must happen for institutions to remain competitive, and much of this change will be digital. So not being on a digital transformation journey is an untenable position for almost all institutions. However, the scope, scale, and timelines may vary, and we heard 6 organizations represented here talking about it. Then we also talked about clients must remain at the very center of the change in terms of improved services and channels and in solutions that meet real needs. Some clients will need very different solutions. Institutions must see the need for change, desire change, and be prepared to invest in change. Digital transformation does not yield results immediately. It is an expensive, time-consuming, inexact, and painful process. Moreover, we also heard from our panelists that digital transformation is a journey, it is not a destination. This may mean that there may be very many paths to digitization. Some may be faster, some may be slower, some would be more costly, and some would be less expensive. Transforming organizations need to recognize that cultural shifts and change require proactive management. Digital transformation needs to account for and mitigate client risk. Also, another thing that I heard was that digital transformation does not solve all organizational problems. So if your strategic model, if your business model, or there are operational challenges and issues in the products and processes, then that could not be set right by just digitizing it. And last one, which we heard, is technology for digital transformation should not be disruptive and cutting edge. It is very important for the institutions to decide which technology they are going to use, and they should not be deciding it basis how disruptive it is, but rather basis how useful and effective it is to the organization. And there was one question, which is how do we manage digital transformation given that some staff members start to fear that they're going to lose job offers. So I think that is where change management becomes very important. We have to start thinking about the head, the heart, and the wallets of those who are going to be impacted by the digitization. Thank you so much, panelists. Thank you so much, Juliet, for moderating this. Thanks, Ravi. Thank you, everyone. It was a great session.